Siddhartha Lal was bitten by the biking bug when he was just 18. He chose a road that led him to Royal Enfield, the motorcycle division of his family business. A third-generation entrepreneur and a trained automotive engineer, Siddhartha rode his way to the top in 2006 as the CEO and managing director of the Eicher Group. Eicher began its business of manufacturing tractors in 1959, a business it has moved out of. Since then, it has diversified and has a presence in over 40 countries across the globe. But the road hasn't been without its hurdles. The group is now betting on its joint venture with Volvo to muscle its way into the commercial vehicle business. The time was right to catch up with the man who turned Royal Enfield around to talk to him about brands and the road ahead. Siddhartha, many thanks for joining me on the show. The last time I had a sort of in-depth conversation with you was in 2002, almost 7 years ago. At that point, I remember you were sort of struggling with putting Royal Enfield back on track, and you'd set yourself a 2-year time period by when you would turn things around. What's the current battle that you're waging?
Battles will continue always, and of course the Royal Enfield one has gone through many turns and many phases, and currently we're doing exceedingly well in the Royal Enfield part. It's you know, we managed to do what we were planning to from 2002 to 2004.
That's right.
The motorcycle business has really come of age. It's really come of age. I mean, battle currently is, of course, a very different battle. It's the heavy-duty battle in trucks, and that's really what is the next big frontier. The Indian heavy-duty market, the commercial vehicle market, in my opinion, has been, you know, really behind in terms of technology and other things. I mean, you've seen, you know, what's happened to the motorcycle industry with, you know, with Hero Honda coming in the 80s. You've seen what's happened to the car industry with Maruti Suzuki coming in. And but that's not really happened in the commercial vehicle industry. It's still very backward.
So you're hoping to be the Honda and the Maruti Suzuki of the commercial vehicle space?
Absolutely, absolutely.
That's the aspiration.
The aspiration is that, yeah.
But how do you intend to do that? Because you've got this joint venture now with Volvo, 54% you, about 46% is what Volvo has in that joint venture. You've got two very large entrenched players, Tata Motors and Ashok Leyland. You know about the rule of three. So how do you actually expect to sort of move ahead in this market and gain market share?
The market is enormous. It's around, from a revenue standpoint, it's around maybe 30,000 crores in a good year, and going up to maybe 50,000 crores. And as you said, there's certainly place for more than two players, and we expect that there will be many more players in the commercial vehicle market. The incumbents are not going to hand their share to anybody. It's, you know, they've been around for 50 or 60 years in the market. So, but we see a lot of gaps in the market today. We see that it's really not modern in many aspects. The products are old-fashioned, they're absolutely unsafe, they're underpowered, and they're not even as reliable as they should be.
Okay.
So that's the first thing. And we have an enormous product pipeline now underway, which is being co-developed along with the Volvo technology and along with the incumbent inherent strength that Eicher has.
Sure.
So that's one entire side of it. But actually the more important side is the consumer side. We believe that the consumer is actually quite neglected.
So the aspiration then, as far as the commercial vehicle business or the strategy, is very different from your two-wheeler strategy in that sense, because there you continue to operate as a niche player and your aspiration continues to be niche. Are you moving beyond niche as far as this market is concerned?
Commercial vehicles, we were never niche, and our intention was never to be niche. We were stuck in a smaller area, which is 5 to 12 tons, and we are extremely strong there. But the aspiration has always been to be a full-range commercial vehicle player in India and in developing markets over time. But we felt that to break through and to get us a lot more muscle, whether it's technological muscle or financial muscle or perhaps even some, you know, heavy-duty knowledge. We got Volvo as a partner who's really working with us to co-create this emerging market business model. Their brands, which are Mack, Volvo, Renault, Nissan Diesel, these are all developed market brands. Even they realize that they do not have a business model catering to developing markets. Yet the growth in the next 5, 10, 20 years will be in developing markets.
So what really is the strategy as far as this alliance is concerned in terms of geographies, in terms of product placement, in terms of positioning? Because if you're saying that you want to actually be a sort of full product, you know, at all ends of the spectrum sort of player, then don't you think that being a specialist in a particular segment or a particular category would give you more pricing power and hence also a better shot at the market in that sense?
We're not going to attack each market by just competing head-to-head with a competitor. That's not the idea. But we want to be present in each and every segment of the commercial vehicle market. So, but we are going to approach it certainly very differently by ensuring that we take some of the, let's say the cost structure, some of the frugal engineering capabilities, the distribution which we have as Eicher in India, and we take some of the technological advancements. Sure. I mean, Volvo is the largest engine manufacturer, heavy-duty engine manufacturer in the world, and has huge capabilities in aftermarket, in product development, in international distribution. So we're trying to take the best of both worlds without taking the Volvo type of costs, and by adding to what we already had at Eicher. So
how much are you actually going to be able to bring costs down by? Because, what I pick up is that your return on capital is almost 25% a month as far as Royal Enfield is concerned. That's huge.
The CV business is not yet that high in terms of return on capital employed, but we're extremely lean on capital, and that's been a hallmark of Eicher for many years. Costs are actually in scale. I mean, that's the next frontier of cost for us. So we're currently, in India, we're around, let's say, $500 million revenue in the commercial vehicles, going towards $1 billion in the next 2 to 3 year horizon. But our competitors are much larger. So we need to get the scale in, and the scale will drive costs down. And the scale is in our case currently much more to do with heavy duty, where we have a lower scale today.
Sure.
So when we get the might of Volvo also behind us, also Volvo sourcing, which means that if they start, or now that they're starting to source a lot more through this joint venture, it gives us the muscle with our vendors and with other people. So and those 2 or 3% which come from the cost structure, from lowering costs because of scale, that's 2 or 3% in the bottom line.
So in terms of this joint venture actually being able to manufacture in India and export, what kind of targets have you actually set for yourself, and what happens then to issues like branding and so on and so forth?
The branding philosophy has always been extremely clear of how we're going to go ahead. Volvo has 4 major brands globally in trucks. That's Volvo, which is a global brand, Mack, which is largely a US brand, Renault, which is largely a European brand, and Nissan Diesel, which is Japanese and other markets. Eicher is going to be the developing market brand.
What qualifies as an emerging market? What have those geographies already been identified as far as the alliance is concerned?
Yeah, very simple. I mean, it's anything excluding North America, Europe, Japan and Australia, and perhaps 1 or 2 other markets.
Given the fact that you moved out of tractors because you felt that you were the number 4 player and there wasn't a great advantage that you actually saw in hanging around in that space, how do you intend to de-risk yourself? And you've already got 2 very large, well-entrenched players, plus the fact that this is a very, very cyclical business.
As a company, we're extremely agile, and that's really been the advantage of now VECV coming in. For example, when the down cycle hit, we were the first ones to actually to slash production. We're extremely sharp in actually being able to respond very fast to the market, and that's something that we're going to make sure continues into the joint venture in the next 5-10 years. We have plans for lots of non-cyclical businesses within the CV space. So buses is relatively more non-cyclical. The entire aftermarket is certainly non-cyclical. So spare parts, service, all of that. So and various other surround businesses in CV. So we will be getting into those, but that's not what worries me today, frankly, because really when you get to a very different scale, when we're, let's say, $3 or $4 billion in CVs, then we will start
worrying about cyclicality, not until then. So what is the projection that you're actually working with, and how much have things actually changed on the back of the current sort of global and domestic context?
Everyone's had a bad year coming in, but typically we've been at around 30,000 units. That's been our peak maybe 2 years ago as the Eicher brand, and of course we have the Volvo brand, which has also peaked at around 1,000 units in India. So we expect that with a heavy-duty breakthrough, we're expecting certainly 10% and 15% of the market in the next 3 to 5 years. A 10 to 15% market share in heavy-duty will give us another 30 or 40,000 units, and we expect growth in our current 30,000 as well. So certainly we're looking at more than doubling our sales in the next 3 to 5 year horizon now.
And in terms of investments, have you lined up any more investment plans as far as at least this part of the business is concerned?
Yeah, it is going to be extremely investment heavy now in the next 2 or 3 years. But that's speaking from an Eicher perspective and a Volvo perspective, which we've been quite conservative on investments always. It's going to be met by our cash flows by and large, because we have very strong cash flows already in this business. We have accumulated, we have a cash reserve of around 1,000 crores in this business, and certainly we don't expect to be using up most of this. I can't give you a very specific projection, but we expect certainly in the range of 100+ crores a year in the next few years.
Time for us to take a break. When we return, we'll continue our conversation with Siddhartha Lal on India Inc. Generation Next.